joined with the great Shawn Khunkhun from Dolly Varden. Shawn, thanks for joining us.
It's quite an intro. Thanks for having me.
So, Shawn, here we are at the Beaver Creek Precious Metals Summit. The talk that we keep hearing from CEOs is that there's this huge disconnect right now between, we'll say, commodity prices and equity prices. I know you guys are one of the names that's getting some love out there, just at a $30 million financing. What do you think has created the sentiment?
It's a great question. I don't think it's unique. I know maybe this is the greatest disparity in history in terms of commodity price to equity price. But having said that, you can go back, and I feel like I sound like a broken record because I've said this a few times now, but if you go back and you study history at other moments where a metal price, and let's take gold for instance, gold's hitting all-time highs today as we speak, and you go back to 2006, and it was doing the same thing. It was going through new highs, and the equities were quiet. And it's really a function of a flow of funds, right? So I think a lot of investors, whether they be institutional investors or high net worth investors, get really frustrated because they buy the underlying equities because they have an idea on the commodity, and when they see the commodity working, they get disappointed. But my experience has taught me that initially, in the early stages of a bull market, the commodity price moves first. It's got to climb that wall of worry. It's got to get to a place where, you're having quarterly earnings impacted by the producers. Those producers then need to have the confidence and the mandate to go down market. So to me, am I a little bit surprised that 2,000 gold, a definitive break above it, 2,500 gold, and you'd have these juniors, and forget the juniors, go up market to the developers and even the junior producers trading at the valuations? It's a little bit surprising, but it's also really encouraging, because it tells me that we're in the earliest innings of this bull market, and it's like anything. If a company's improving its fundamentals and having the price of the metals higher, that is very good for the bottom line. I'd be more concerned if we'd have record high in equity prices, stocks hitting 52-week highs in unsustainable manners, hockey stick style charts, and the underlying commodities weren't there. This to me is the best time ever, because the commodity prices are telegraphing something. And we're just in an environment where, maybe because of demographics, maybe because of the last bull market being the best bull market in the last 100 years, you go back and analyze that period from 2000 to 2010, you look at the legends, that's when the legends were made. The Lassondes, the Justras, the Sprots, the Lundins, the Friedlands. Pre-2000, they had done okay, but that market marked the best market in a century. So then we had to digest that high, and we had a decade-long bear market. And to me, the longer that bear, the more sideways action on price. If we talk about gold basing at 1,300 for 6.5 years, now we've seen it double. Ronnie Stofferle was interviewed at this conference calling for $4,000 gold. I think it's going to 8,000.
Wow.
Won't live there, but it'll go there. And I've always said between 2020 and 2040, I think the average gold price easily will be $3,500 an ounce. And we've got a long way to go for that to play out. And we're going to have spikes along the way.
Yeah, well, we just got our YouTube thumbnail, $8,000 gold.
8,800.
8,800, wow. Okay, so we recently had the pleasure to go down and see your project in the Golden Triangle. Absolutely stunning up there. And for our audience, you're going to see the full video right now. We got a trailer of it on our YouTube channel. And one of the things that I sort of walked away with is just the overall difficulty it must have been back in the day when they would have been mining for silver up in the Golden Triangle. I can't imagine how difficult getting equipment up there and mining for silver would have been in the early 1900s. And since then, you guys have gone out, obviously we stopped production. You guys have gone out, discovered a huge amount of silver. What's it going to take for silver to get back into production in that camp? Is it going to take $40, $50 silver, or is it just going to take you guys to continue to find more ounces?
It's a great question. And when I look at that, when I hear that question and I think about the area at large, I zoom out of the Dolly Varden property, and what I'm about to say about Dolly Varden can apply to the Premier deposit, the SK Creek deposit, which Skeena is advancing and funded to build and get into production. It applies to Bruce Jack, that Newmont is producing. So when I look at the Golden Triangle, really, my takeaway is this. If 100 years ago, when there was no roads, no power, no deep water seaport, when ice covered this whole area, when, and if you had these the richest metals in the world, the richest systems, the biggest, the richest, coming right and daylighting through the ice to surface. And the old timers that didn't have any of the geophysics, geochemistry, any of the technologies that we have today to aid us, the machines that we have today, the knowledge. If this was, in Dolly's case, the richest silver mine in the British Empire, Canada's third largest silver mine, Premier, best gold mine of the era, same with SK Creek. I think Bruce Jack is up there and producing today. So if those mines worked then, with the advent of the technology, with the glaciers retreating, with record high gold prices, it's time to reawaken the treasures, the past treasures of the Golden Triangle. And so it's less a function of what's the gold price or silver price. It's more a function of what's the appropriate approach. When I took over Dolly Varden 4.5 years ago, we could have taken the Torbert mine back into production. There was about 40 million ounces of 300 gram material. There's 7 kilometers of underground workings. We could have went in there and produced 4 million ounces for a decade. It's a great business. A company like that was producing 4 million ounces of silver would have a monster valuation measured in the hundreds of millions of dollars. Now, the strategy that I employed was, look, silver was $16. The company was getting a value at 40 cents an ounce in the ground. Is there discovery potential? Is there regional consolidation to do? Could we grow the mineral inventory? Not spend the capital on development and mining when we're not being rewarded turning our silver over for sub $20 an ounce, but instead look to try to grow and expand the mineral inventory. So it's really trying to understand what the appropriate mine plan is. The mining industry is littered with companies that have gone bankrupt because they tried to rush without doing the appropriate drilling, understanding the deposit, defining the deposit, not having enough development work so that they could feed these hungry mills. And so my approach was, look, I had an idea that the silver price was going higher for a handful of reasons. Gold prices were taking off. Silver's always outperformed gold. But then what was happening, what was gaining momentum, was this industrial demand. And that's why we've seen 250 million ounce deficits year after year after year.
It's going to be the 4th year.
I wouldn't be surprised if it was 500 million ounce deficit. So my point here is I want to try to understand what the appropriate mine plan is. And the only way to do that is to really understand what you have. And so I'm trying to wrap my arms around, I was told that Dolly Varden was not a good project when I came here. I was told it was small. I was told that it was an old project. And I had a different idea. And my idea was, it's not about the old Dolly Varden silver mine. It's about the Torbert deposit. It's about the other deposits. We had a geologist come in, Amanda Bennett, And she has grown the Wolf deposit, which is 1.5 kilometers away from Torbrit. We've had other successful hits at Moose and Chance. We bought Homestake. We added 1 million ounces of gold and 20 million ounces of silver through an acquisition. And so, look, I'm trying to understand right now on a all in basis, we've got about 64 million ounces of silver and 1 million ounces of gold. I'm trying to understand, how big is this system? Is it going to be an Escape? Is it going to be a Brucejack? Is it going to be a Premier? Should we consider doing more regional consolidation? We bought Big Bulk. It's a big copper gold porphyry. So look, my share price has gone from 20 cents a share when I took over the company to $1.10 a share today. We've raised $120 million worth of capital in a very tough market where you have the greatest disparity between equity price and commodity price, and silver hasn't even caught a bid yet. And we've done it not doing a down round, not printing a warrant, not taking on any debt. And so my shareholders and anyone watching should trust in our business plan, our vision, our execution, should trust in our scientists who are making the discoveries, should trust in our shareholders like Eric Sprott and others. And look, I'm excited because I have a company today, and this is really exciting. So I think silver's going to go. I have a company that's growing through discovery. Because I have 40 million in the bank, and because of the way we're managing that treasury, if silver makes a run between now and 2026, we don't need to print a share. So if any investor wants to get into Dolly Varden, there's no offering that's going to come down the table. So that's going to create demand in the market, and it's going to put the share price higher.
So is now the inflection point? I don't know, you come from 20 cents to $1.
Listen, gold has run from 1,800 to 2,500 in a year. Is it due for a pullback? Has October historically been a tough month in the stock market? I'm not in this for a week, a month. I can't put my calendar on, is this the inflection point? But what I can tell you is if you're willing to look out with me until Q1 of 2026, if you have the patience for the next 15, 16 months, I feel like you're going to find yourself in one of these silver moments. We had one in 1980. We had one in 2011. We had a mini moment in 2020, 2021, from August to January there. I think we're setting up for the next one. And I suspect we get an all-time high in 2026.
Wow. Last question for you, Shawn, and that was a great rant. You guys just, as you said, raised $30 million from Eric Sprott. Where's the funds going to go? Is it going into exploration?
So yeah, so we upped the program. We added some meters in terms of the drill program. It fully funds us through 2025. So it's going after, historically, we've put about 88% of the money we raise in the ground. And so it's going in the ground. Now, it does put us in a position where if there is a regional opportunity to add to our land package, add to our mineral deposits, we are in a position where we could take advantage of that disparity. And so we're looking and we're studying. And so it's going to go into growing the optionality of our resources through land acquisitions and through discovery.
Yeah, well, Shawn, thanks very much for hopping on here. I think that you guys are probably one of the stories that our audience has to have on their watch list if they're not already an investor, because I fully agree with your sentiment that we are on the brink of a silver bull market, and names like yours that have that torque, basically no overhang, are names that I think that they ought to be watching. So thanks for doing this, Shawn.
Thanks for having me on, and thanks for coming up to site.